Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China East Air interim report. China Eastern Airlines offers a diverse range of services across various sectors within the civil aviation industry. The company provides passenger and cargo transportation, ground services, tour operations, air catering, flight training, aircraft maintenance, import/export, investment, leasing, and consultation services, business aviation services, e-commerce platform and ticket agency services, property management services, research and development of aviation technology, and products, sale of goods. The company operates a fleet of 778 aircraft, including passenger and business planes. The recent surge in China Eastern Air's stock price can be attributed to several key factors. A strong recovery in passenger traffic, particularly in September 2024, marked a significant turning point for the airline. With a 25% year-on-year increase in passenger traffic and an improved passenger load factor of 83.5%, investors saw a boost in earnings and a strong recovery in the aviation sector. The release of 2024 results in March 2025 further fueled investor confidence, as China Eastern Airlines reported an operating profit and a 16.3% revenue growth, driven primarily by international capacity expansion. The surge in holiday travel demand for the combined National Day and Mid-Autumn Festival holidays in September 2025 also contributed to the stock price increase, with domestic flight bookings rising by over 25% year-on-year and international bookings increasing by approximately 14%. These positive market events have collectively led to a significant increase in China Eastern Air's stock price, exceeding 36.28% from its 52-week low, making it one of the most notable performers in the aviation sector. The primary drivers of revenue growth for the company are primarily attributed to international routes, which saw a significant increase of 20.58% in passenger traffic revenues. Domestic routes also contributed to revenue growth, albeit at a slower pace of 1.75%. Additionally, online sales revenue and new retail products revenue experienced substantial year-on-year increases of 30% and 24.77%, respectively. The expansion of multimodal transportation products and innovative cooperation models, such as the joint membership with Starbucks, also played a role in driving revenue growth. On the other hand, regional routes saw a decline of 0.67%, while domestic routes experienced a slight decrease of 2.09%. China's United Airlines revenue declined by 19.11% year-on-year, contributing to overall revenue decline. Net income and profit margins. A shift in fortune. The financial summary reveals a mixed bag of results for net income and profit margins. Initially, the company's net income decreased by 48% from RMB 3,099 million to RMB 1,592 million. However, this trend was reversed with an increase of 5.9% from RMB 3,200 million to RMB 3,391 million. Furthermore, the net loss attributable to equity holders increased by 11.4% year-over-year. In terms of profit margins, operating income saw a significant surge of 1,200% from RMB 40 million to RMB 484 million. Conversely, loss before income tax decreased by 46%. The company's finance costs also decreased from 2710 to 2216. Notably, aircraft fuel costs dropped by 8.08%, while other operating income increased by 5.97%. The varying trends in net income and profit margins can be attributed to a combination of factors, including changes in operating expenses, revenue streams, and external market conditions. The company's ability to adapt to these fluctuations will play a crucial role in determining its future financial performance. The company's financial performance indicates a strong ability to generate cash from its core business activities. The operating cash flow has been consistently positive over the past 2 years, with significant increases in 2025 compared to 2024. This trend suggests that the company is efficiently managing its operations and generating sufficient cash to support its growth and investments. The company's debt level has experienced a slight increase, with total debt rising by 2.11% and non-current liabilities increasing by 1.45%. However, long-term borrowings have decreased by RMB 959 million. On the other hand, interest expenses have seen a significant decrease of 18.7%, from RMB 2,710 million to RMB 2,207 million, indicating a reduction in financial burden. The company's financial performance was mixed across various segments and regions. Notably, the airline transportation operations segment saw a significant increase in revenue to 66,650 RMB million. The other transportation operations segment also reported a notable profit before income tax of 168 RMB million. Additionally, Shanghai Pudong Airport, as well as domestic and international operations, all performed well. In contrast, regional operations in Hong Kong, Macau, and Taiwan lacked specific revenue or profit information, making their performance unclear. Management's outlook on company strategy. The company's strategy focuses on managing risk through derivative financial instruments and promoting international business to mitigate exchange rate fluctuations. Additionally, management emphasizes sustainable development by accelerating ESG system construction and improving governance and performance. Notably, the company has no plans for significant investments or acquisitions in the future. The company's financial summary reveals that it has taken two significant actions in the past period. Firstly, the company has chosen not to pay dividends for the half-year ended 30 June 2025, as recommended by the board. Secondly, the company has bought back shares, repurchasing a total of 89,553,900 A shares and 83,678,000 H shares at a combined cost of approximately RMB 336,800,000, 200 and H Kate 122,297,700 dollars respectively. That concludes the financial summary for China East Air. Feel free to comment below, and I will be happy to answer them when possible.